We had shared a few predictions this summer about what the fall market would likely bring. So the question is, were we right? Plus, we're going to check in on sellers and how they're dealing with the current market. That and more in this week's report. As always, thanks for taking a few minutes to join us for our weekly market report, where we share our real-time market insights into our local housing market. My name is Scott Parker. I'm the Vice President of Sales and Marketing here at John Green Realtor, and I'll be taking you through this week's data. So let's dive in. First up, new listings for the 4 counties we track, and you can see pretty flat week over week. Go over and look at contract activity, and that did dip a tad bit this week. We had anticipated this fall being a little stronger than last fall when we made that call in the summer. But rates have jumped from mid-6s to nearly 8%, and it has resulted in an almost identical fall market to last year when you look at contract activity. Here's the showing report, and we love this graph because it's a strong leading indicator of where the market's going. Traffic remains gradually higher than last year, even with inventory trailing. So despite rates hitting century highs, there are still buyers out actively looking at properties, which indicates there's no massive bottoming out anywhere on the horizon. More likely is we get a strong surge if rates do decline at some point. Here's off-market activity, and these are those sellers who are taking their homes off the market without a successful sale. And so this number remains well below last year, even though interest rates hit that century high this past week. And sellers are taking price reductions at a little bit higher rate than we have seen over the past couple of years. And one of the main themes we're seeing this fall is there are a lot of opposing forces suppressing the real estate market, but they have been gradual versus last year where things really turned quickly in September and October. So sellers this year seem much more prepared for a changing market than they were last year. And let's take a look at balance in the market. So these are our balance metrics. And on this graph, 60% kind of represents a pretty balanced market. We got a little closer to that with a flat new listings week and a slight decline this week in contract activity. Here we add in off-market activity so we get the full picture of the market. And from here, we see a little bit of a reversal of a trend this week. Off-market activity had bumped up a bit in the last couple of weeks, but cooled off this past week. So to recap, rising interest rates have made this fall perform almost identical to what we saw last fall. But with the more gradual rate increases this fall, sellers appear to be more prepared for market adjustments. As always, thanks again for joining us this week, and we'll see you right here again next week.